Retail investors who chased the Bitcoin rally just got blindsided by a devastating crash. We're not talking about a 30% drop in Bitcoin itself. We're talking about 80% losses in the popular exchange-traded funds, MSTX and MSTU, that promise to supercharge your crypto gains. This isn't just a market correction. It's a terrifying lesson in how leverage and volatility can erase fortunes overnight. At the center of this financial storm is Strategy Inc., the company that became famous for wrapping Bitcoin exposure into a publicly traded stock. Strategy's shares have plunged over 60% from their recent highs because Bitcoin itself fell 30% from its October peak, trading near $87,000. For Strategy, this massive decline has collapsed a critical valuation premium, known as mNAV, bringing it dangerously close to the 1.0 warning level. If that ratio drops below 1, management has admitted they might be forced to do the unthinkable: sell Bitcoin to meet obligations. The true disaster unfolded in the leveraged ETFs. Funds like MSTX and MSTU were built with a promise: double the daily return of the Strategy stock. When the stock went up, the gains were explosive. But when the stock tumbled, the leverage magnified the pain. Down 80% this year, these funds are now among the worst performing products in the entire US ETF market. This is the brutal reality of volatility decay, where compounding losses in choppy markets destroy capital, even if the underlying stock doesn't fall as much. The easy way to supercharge bets became a high-octane demolition derby for retail accounts. To head off the worst-case scenario, a forced Bitcoin fire sale, Strategy just announced a massive Lifeline, a $1.44 billion reserve. This cash reserve, funded by selling common stock, is designed to cover dividend and interest payments for the next 21 months, calming fears about a liquidity crunch. But the announcement did little to stop the broader slide because it doesn't fix the core problem: Strategy's heavy reliance on debt and the looming threat of dilution for existing shareholders. As if the stock crash weren't enough, Strategy is now facing index removal risk. Analysts at JP Morgan are warning that the company could be removed from major benchmarks like the MSCI USA or the NASDAQ 100. For a company once floated as a potential S&P 500 candidate, this is a stark reversal. Index removal would trigger billions in passive outflows, further amplifying the volatility and creating another massive headwind for the stock. This is the most profound cautionary tale of the crypto cycle. The Strategy stock complex, the equity and the leveraged ETFs, has officially shifted from a momentum trade to a stress test. As Jones Trading's Michael O'Rourke says, a leveraged ETF on a stock that levers up to buy a highly speculative asset is a risk profile of its own. Retail investors are paying the ultimate price for chasing the double multiplier. Let me know your thoughts in the comments below. Don't forget to subscribe for more updates.